All right, welcome to the daily market recap for Thursday, December 18th. In today's video, we'll be going over the action of the indexes, the liquid leaders, industry ETFs, then end the video with long and short setups going into tomorrow, like I do with every daily recap. So if you guys enjoyed the video, please leave a like and subscribe to the channel. And if you want my market takes throughout the trading day, along with the live stream at the open, and any trades that I personally take, you can sign up for the Market Pulse Discord using the link in the comment section. Starting things off with the NASDAQ, good start of the day. Obviously, a large gap up after CPI inflation, at least partial inflation numbers came out cooler than expected. We bounced on that. We also had MU's earnings gapping up after hours last night. So big, ugly bar yesterday, followed by a gap up. And then intraday action was very, very choppy. We rallied up to the 50-day, just under it, got rejected there, and all day just kind of ping-ponging back and forth. Ended the day relatively weak, back under the 5-day moving average, and some charts held up. And this is like the nice part about chop is the strongest charts, they'll show that they're the strongest charts. The weakest charts show that they're the weakest. So more chop here as we kind of see volatility decline just under the 5, the 10, the 20, and the 50-day moving averages. Wouldn't be the worst thing in the world for tomorrow. S&P 500 up 0.75%, gapped back through the 50-day moving average, tried to get through the 5, the 10, and the 20, but eventually closed below those. We did bounce right at the 50-day, like as the kind of midday sell-off took place. So hopefully we could hold that at least on a closing basis, and we could start to build out some higher lows here. IWO, the growth stocks of the Russell 2000, also gapped up, but very weak closing range at least. Was still up 0.8%, but it closed back under the 5, the 10, the 20, and the 50-day moving averages. ARKK, another gap up 1.25% today, but closed right near the low of the day. Very similar reaction. And it just kind of shows you that like there's so much overhead supply that even with a large gap up right into declining moving averages, because we haven't had volatility contraction, there's not much follow through. There's still a lot of chop. Hopefully that will end at some point, but we're not out of the woods yet. Taking a look at Bitcoin, very, very weak. Another test of the 20-day EMA, rejected there. Now trading right at 85K, 85.3. This looks ready for like another break lower. Maybe we can get back to this like 75K area. And then Ethereum still under all of the key moving averages, right back to the kind of the previous higher low section, right at $2,800, and just another risk off signal for the overall market. Taking a look at the liquid leaders, I did a bunch of reshuffling today. So I added MU, I added Eli Lilly, I added Palantir, and we kicked out CIEN, which is still holding up okay. Um, ASML, and I'm blanking on the third one GEV kicked out. So MU with a earnings gap up, rejected right at that resistance gap, fell through a second one and closed weaker in the daily range, still up 10.2%. But whenever you have overhead resistance gaps that get rejected, like that's not an area that I want to be buying into. We need to let this kind of build and chop out before it gets ready. PL up 6.1%, very strong action, along with ASTS in that same with that same Rockets group. Gap up, open on the low of the day, got right through the HVC, and then kind of came back in at the end of the day, closed right on that level. LITE, nice gap up and closed back over a resistance gap, which is really positive to see overall. Back through all the key moving averages as well, up 5.3%. WDC closing at the low of the day, but a nice gap up and closed back through the 5 and the 10-day EMAs after closing right on the 20-day yesterday. Palantir, new addition, very liquid stock, and I'm trying to focus on the most liquid names as the market is extremely choppy. Because if you can't get any traction on the liquid, like on the most liquid stocks, you're probably not going to get traction on the choppier, higher ADR ones. So Palantir at 4.7% today. I really like the ugly close back under the 50, back under the 20, followed by a gap up. This opened on the low, reclaimed the 5 and the 10-day moving averages, and then closed still in the upper half of the daily range, while many stocks closed near the low of the day. Tesla, also great relative strength today, up 3.5%, closing in the upper half of the range. like got up to the previous closing high and then kind of reversed at that level, but still over the 5 day moving average. Any chop over the 5 day is quality price action in this market. COHR up 3%, bounced right at the 20-day moving average and still held like a very small gap today, but still under the 5 and the 10-day EMAs. AMAT also gap up, close at the low of the day, still under the 5, the 10, the 20-day, up 2% today. And then Eli Lilly coming back. Little pivot failure here, but again, the market was so volatile. I don't expect too much from that. Up 1.43% and is one of the liquid leaders that trades really linearly, which I am glad. Industry ETFs, we will go through a couple ones. Semiconductors, SMH, big gap up, immediately rejected at the 50-day moving average, closing kind of towards the lower part of the daily range. Nvidia, AMD still relatively weak overall. Really would like to close above the highs from December 17th. At least then we can get a higher low and start to build this out because I hate the new highs followed immediately by two unfilled gap downs in the loss of the 50-day. It's a very ugly combination there. TAN, the solar ETF, up, gapping back through the 5, the 10, the 20, and the 50-day moving average. Did close relatively weak, but Enphase, which has been just a horrible stock, is starting to get over the 50-day moving average. So maybe that group trades a little bit cleaner after that. UFO, nice little pop. This has PL, ASTS, those types of names. Back through the 50-day moving average. Cybersecurity, very ugly close yesterday under the 200-day, followed by a gap up. We'll see if we could follow through to the upside here, and that could be a higher low. Um, Home builders still relatively weak, big gap up, and then losing the key moving averages. Maybe like a bull flag here, but has to get going to the upside and really couldn't get going today with the market like gapping up and staying relatively strong. I still think there's a lot of work to be done on that chart. XLF, probably the most important chart in my mind. Like Tesla, I would say Tesla and XLF are the two most important charts. XLF, another name that made new highs and then started stalling out there, was actually red today while the rest of the market was very strong. Not a great sign. I don't want to see this as like new highs and then immediately fail. So hopefully we can hold that 10-day moving average at least on a closing basis. Otherwise, if we lose financials, it's not a good sign for the market. Biotechs got stopped out of my LABU position today. If we can gap up and kind of just call this an ugly close, gap up, we could reignite the uptrend. I'll get back into that name. But for now, sitting back into cash. And then the big story today, MSOS, the cannabis ETF. Cannabis got reclassified. And this was just a pure sell the news event. We had like 3 days getting going. We even gapped up today with the knowledge that Trump was going to reclassify cannabis and just pure destruction here. And now at this point, like I don't know what good news could kind of come from this to get this going again. This kind of seems like a kill bar for this. So I might just take it off my industry ETF list and kind of ignore it. Before we get into the long and the short setups, we do have updated NAIM active investors numbers, and very, very unfortunate. They got even more long. So again, NAIM, it shows their actual positioning. This isn't a sentiment survey, their actual positioning as of Wednesday's close. So taking into consideration all of the selling that happened all the way down here, they're even more long than before. They're almost the longest they've been all year long, just slightly under that 100.8 reading that we had in December or in October before we got all that volatility. And whenever you're over 95%, breakouts tend to not work very well. If everyone is already long, who else is left to buy? Yes, this number can get more long, and it does tend to get longer, like right into the end of the year with some window shopping or window dressing, but not a great sign, like overall for the market if everyone's already long and the market looks like this. So For me, that just tells me like you don't really want to be buying breakouts, especially in anything that's like lower liquidity where you'll have any trouble getting out of, and just expect a little bit more challenging market environment. So with that said, let's talk about some long setups. First one is Tesla. Again, I think it's probably the most important chart along with XLF, the financial ETF. Don't want to buy it on strength up here. Let it pull back. Let the market kind of pull back. And if we can get an undercut of today's gap, or in a perfect world, of this support gap below the 10-day moving average, I think that would be like a breakout retest spot, would be the spot to like really load the boat. But we would need the market to pull this down because without the market pulling back, this feels like it just wants to go way, way higher. Google, really ugly candle yesterday, and not an A plus setup by any means, but it's a liquid stock, very, very liquid. And this was the first kind of like ugly close, followed by a gap up. We closed in the upper half of the daily range. So if we could push through today's high, stop at today's low, that would be the trade. Otherwise, like if it comes back into the gap zone, I don't want to be like continuing to chase it lower below the key moving averages here, but basically, if the market's going to hold up, Google is probably going to hold up. So watch if you're not even going to trade it, which is fine, just through the 5-day moving average and today's high, keep an alert there. Palantir, new to the leaders list. We have this kind of clean pivot that if if positioning was less than 95%, if the market was acting well, like that would be a spot where I would be completely fine taking with full size. I would still be fine taking that trade, probably with like half position size, and then keep my stop at whatever the low of the day is. But in a perfect world, we would get like another little pullback day into at least like the 5-day, recapture the daily VWAP. So then we could keep our stop under the 50-day moving average and the 20-day EMA, just under 180. Eli Lilly, just looking for a pullback into the 20-day moving average and the support gap. Undercut and reclaim that would be the buy point. Stop 2 or 3%, just under $1,000. LITE, little pullback into today's gap, into a rising 20-day moving average, like a higher low test of the 20-day. That would be at 319. That's the spot that I'll be watching for. NTRA, huge accumulation on the way up, then very orderly pullback. Tried to get going today and then squatted with other biotechs kind of being heavy. Through today's high, like recapturing this would be buyable with a stop under today's low. Las Vegas Sands, one of the better charts actually. And if you zoom out, like, or let me just go to a weekly chart, you can see we've been chopping around for multiple years here. And we're now right at those like or like basically right before the pandemic started, at those highs. We're right back at that level. We're getting nice and tight on the daily chart. We had a shakeout. So anyone who like bought late probably got shook out on December 12th. Very tight price action here. Undercut of the 20-day moving average and reclaim would be my preferred entry, just so I'm not buying anything on strength. But through today's high, could be buyable with a stop at the 20-day. CRS, metal and mining, we've got a little gap up today to work with. So recap or undercut and reclaim of today's gap low and the 20-day moving average would be the buy spot. I like how this like came into the high volume close off of earnings and whipped multiple times down there and then eventually at the 50-day moving average. Shows that there still is some bid on this stock. So that's the spot that I'd be watching for, like the 316 area. PL, love how the stock has been acting. It was the highest volume ever on the previous earnings. They did a secondary offering and then it just rocketed higher. Um, Looked great going into earnings, gap up, highest dollar volume ever on their earnings, up 35%. Yesterday was like the first ugly bar in the entire sequence, even though like even while the market was pulling back, it only had one like I would say ugly bar. Closed under the 5-day, immediately gaps up, reclaims the 5-day, and closes right on the HVC level. Just a like weakness in the morning, and then a recapture of HVC would be buyable. Stop under today's low. If you could stretch it to under the closing low of the previous day, that's probably too wide. I would probably just leave it slightly under the 5-day EMA. Kohl's, KSS, retail clothing has been extremely strong as a theme. This one, you could say it's been lagging a little bit or just digesting its gains. Like overhead, on the left side of the chart, there is some overhead. So after a 40% move on earnings, followed by another 7.5%, some kind of digestion here makes sense. Volume has been lightening up. We've closed over the high volume close every day but once. We had the nice shakeout on the 16th. Today we squatted a little bit and retail kind of came down, which is fine. Two different ways to enter this is an undercut and reclaim of the high volume close of today's gap right at that 22, what is it, 22.42 level. Otherwise, just like a gap up opening range break, I would say like through 23.10, kind of like a previous pivot right here. Um, I know some people draw downtrend lines. I think that would probably get you right at that same spot, right around $23 as the entry. And then just stay above VWAP. Like if you're playing this for a momentum move on the way up, it should stay above the daily VWAP. Frog, one of the better, like thinner traded names. It still trades $100 million, $120 million a day, um, but a little bit on the thin side. Pulled back in the 20-day moving average, breakout retest, gapped up today, closed right at the 5 and the 10. Still don't want to buy this on strength. Look for a higher low shakeout of the gap zone of the 20-day EMA at $64. CHYM, I love how this acted today. Higher highs, higher lows, closed over the 5-day moving average. Again, in a market that wasn't super choppy, in a market that wasn't overbought, like through today's high, I think would be perfectly fine to buy. And maybe you do that with just like smaller position sizing. But I'll keep my alerts at the 10-day EMA. Just an undercut of like $25 in reclaim that could be buyable. BTU probably needed to be bought today at the open. Really nice base here. And coal names, AMR, another one, very strong price action. Now just looking for a higher low test of the 50-day moving average. So coming back into this 29 spot, keep your spot stop under 28.30, under the 20-day moving average and gap zone. AXSM continues to just flag out. This has been on the watch list the last couple days. It's an individual pharmaceutical name, so make sure you're sizing appropriately with that. To me, no more than like 5% of your account, 10% like absolutely max. But through today's high, nice little flag. And then JMIA, I don't think there's a super clean setup right now, but this is a stock that continues to show great relative strength. Anytime that market pressure gets lifted, it rallies right back up, similar to Lemonade as well. I didn't put that on the list today, but I've got some alerts set on that. Um, Looking for just like another pullback or a couple days tightening up while the market tightens up, then a breakout through 13 might work. I just don't want to chase anything with positioning heavy here, but this is a name that is starting to really stick out to me as a potential leader. Then on the short side, we got Nvidia. Hasn't gone anywhere for a couple months. We have got 8 unfilled gap downs. I've never seen a stock have 8 unfilled gap downs at the after like multiple hundreds% move that didn't start to break down. And I think that's kind of what we're seeing with semis. Uh, Still don't want to short this into weakness into a spot that we've seen the stock bounce at before, because that would skew the risk reward against us. So let it rally up at least through the 10-day, at least through this resistance gap. I think like perfect scenario would be a rally up to the 20-day and this 180 level. Then you could keep your stop above the previous resistance gap at 184 and still manage your risk properly. Amazon, another liquid mega cap stock that rejected off the 50-day moving average. To me, this is like a failed breakout. We break out on earnings, immediately fail, put in a lower high. Um, Really not any strength. Even today, like closed middle part of the daily range, rejected at the key area. A little bit more of a rally into the gap zone at 230 would be shortable with a stop at like 235, just above the previous resistance gap there. Costco, we've talked about this every day. It's like right on the edge of starting its stage four downtrend. If I think you could argue it's already in stage four and it broke at 878. But a couple chop days here under the 5-day moving average, and we are very likely to get just like a very quick drop from here. Um, still would rather like if you're not shorted already, I would wait for a rally up to the 10-day, kind of like a like flush retest of the break point, and then if we lose the daily view app, you short there, stop, just get it over the 20-day EMA. Rigetti, probably the weakest of all the quantum names outside of QUBT, which is already trash. Um, Already back to its lows where IONQ, QBTS is still trading like significantly higher than its like first pullback lows. There is a support gap here, so don't want to short into this area. But if we like gap down under it, then I think we just very quickly get to the 200-day moving average. I think this momentum is completely gone from the group. Any little rally to the 10-day and then a loss of the daily VWAP, and I would be looking to short it pretty heavily. EOSE, I really hoped that this stock was going to be stronger. We kind of made new highs and then it immediately reversed, put in a lower high, lost the key moving averages, and now you have the 5, the 10, the 20, and the 50 all above price and starting to slope down. We closed out a support gap yesterday and then closed very weak again today. I just think through today's low, stop at today's high could be the short trade. MMYT, a stock that we had tracked and we talked about as a stage four decline for a very long time. We got the break on earnings. It dropped from $90 all the way down to 70. Now we've rallied right back up into that neckline, and this is a very good risk reward spot to reshort it. Um, Today was probably the day to do it where it rallied back up, lost the daily view app, and then you could keep your stop super tight at like $87. So any little rally back up and then another loss of the daily view app would be shortable with the stop at the previous high, call it $87. And then last we have VSAT, just a lot of, I don't know, some weakness here. I don't feel like this is a very strong stock. We rallied, put in a lower high, gap down off that level. We lost all the moving averages, and now the 50 days starting to slope down as well. It's already made a very large move from $8 up to $42. Maybe just needs time to come back to like this support gap, build out another true base before it gets going. It just feels heavy to me. So a little like I would rather short it on a rally up like into the 10-day moving average at like 34.50. Then I could keep my stop over the 50-day moving average. But through today's low, stop at today's high, other way to trade it. So that's going to be the daily market recap for Thursday, December 18th. If you guys enjoyed the video, please leave a like and subscribe to the channel. And if you want my market takes throughout the trading day, along with the live stream at the open, you can sign up for the Market Pulse Discord using the link in the comment section. I hope you have a great night, and I'll see you guys in the next video. Take care.